This is your LMAX exchange technical update for Tuesday, February 7th, 2017. Euro-dollar. So although the euro pulled back in Monday trade, the bullish channel still remains intact, and we need to see a break below 106.20 to put the pressure back on the downside. Until then, there's still risk for a pushback above the December peak at 108.75. Sterling dollar. So cable has recently stalled out ahead of critical resistance at 27.75, and this opens the door for the possibility of a bearish resumption in this market back towards those multi-year lows that we saw in October of 2016 at 118.40. Of course, we would need to watch 124. A close below 124 on Tuesday will do a good job of putting the pressure back on the downside, while inability to do so could still open the door for a push back towards a test of that 27.75 December peak. Dollar yen. So dollar yen is breaking down following a period of consolidation, and this breakdown does expose a measure move objective into the 109.50 area over the coming sessions. At this point, we need to see a break all the way back above recent highs in the 115.62 area, the 115.60 area, to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to be very well capped into rallies. The market seems to be intent on testing or retesting that 2016 base at 106.24. Only back above 107.60 would compromise this outlook. Aussie dollar. So Aussie has had a very nice run in 2017, and with the market trading up to some critical medium-term resistance in the 77 to 78 area, expect the market to stall out ahead of a bearish resumption. Only a close back above 78 would compromise this toppish outlook now for Aussie dollar. Dollar CAD. So dollar CAD recently traded down below 130, but the market has been unable to establish a close below the psychological barrier, which suggests that we could see a base here. At this point, a close back above recent highs in the 31.70 area would do a good job of strengthening that outlook and putting the pressure immediately back on the top side, but only a close back below 29.69, the recent low, would compromise the more constructive outlook for dollar CAD. Kiwi dollar. The New Zealand dollar has seen a very nice run up in 2017 towards 73.50, but overall, if you look at this chart going back to 2016, it looks like the market could be topping out. At this point, though, we need to see a break and close back below 72 to confirm this bearish bias. SPX 500. The S&P 500 recently traded up to a record high, and though we've seen a little bit of a pullback since, the market remains firmly intent on trading to the top side. A break above the recent highs in the 2303, 2304 area would expose 2320, 2340 further up. At this point, we need to see a close back below 2232, that low from the end of 2016, to confirm a possible shift in the structure. Gold. So gold continues to run higher following its latest pullback to 1180 that we saw back in late January. The break that we had seen above 1220 area now exposes fresh upside towards 1260 in the sessions ahead. Only back below 1180 would compromise this constructive outlook for gold.